Afternoon, guys. So we're going to look at gold. We're going to have a short and brief analysis on the precious metal. I did ask on the group that which currency pair you guys want me to look at, or which commodity or which index. So I got a suggestion, someone asking me to look at gold. So with the precious metal, you can clearly see price now is in the territories of what we refer to as a parabolic trend. Remember, we've got an uptrend, we've got a downtrend. Now we are in that stage, or we're in those conditions where gold is now in a parabolic trend. Market is trending, going to the upside, but that does not mean there's no displacement to the downside or what, or certain moves that go lower. As you can see, the previous month, which is April, we have seen a huge rejection of higher price, all the way from 2.430 an ounce down to 2.2. That's a big drop in terms of gold of late, because you could see March, big move. February, market was reaccumulating. Same applies as January. So we've had January, February, March and April confirming our uptrend. But with the beginning of the new month now, so this is the first day of May. With the beginning of the new month, you need to give it a bit of leeway, give it time for you to understand what major trend are we going to look at in the coming month or in the coming quarter, second quarter of the year. But be that as it may, gold is quite strong at the moment, but it's in a territory where we are now in overbought conditions. Market is in overbought conditions, so you need to be cautious in regards to long positions. But if the fundamentals align, then there's no problem in going long when market has retraced lower. During those protraction phases to the downside, the reaccumulation in discount, then you need to be a buyer of the precious metal. So on the monthly chart, what can we take out in terms of our technical analysis? So we've got the high of December, right? So that's the high of December. As you can see, I've started with the blank chart. So we've got the high of December, which was traded through during the month of March. We had a breakthrough to the upside. Now there is too much of a liquidity void between the month of Feb and April. Yes, it's good to take note of that, but there's no point in highlighting it on the chart. Otherwise our chart is going to be too noisy, right? So the high of December is crucial in terms of support. You'll be looking for something like this. That is, if price comes back to the high of December, you'll be looking for that kind of price action, right? But we are a bit far from those kind of scenarios. Now the next point of interest on the monthly chart is the fair value gap between March and the current low of May. Of course, May is only like a couple of hours old. In terms of price action, we only have a few hourly candles, a few H4 candles, but that does not stop this price action being what? A discount array, right? So that's probably a level where you're going to be looking for long opportunities that align with the fundamentals that are being published. Now the major fundamentals that you might need to look at when it comes to precious metal is the rate at which the US is printing money for the support of Ukraine and some Middle East countries. That rate at which they are printing the money is only going to do one thing to the precious metal. It's going to push it to the upside. So it's a case of you now understanding where do you have to go long, at which levels do you have to go long. But if there's some aspects of the fundamentals that tell you otherwise, then there's nothing wrong in looking for shorting opportunities. But that's most probably from previous month high, right? So you can see what I'm doing here. I'm just highlighting the obvious institutional. So this is previous month high. So that's our previous month high, and we've got this fair value gap here. That's the good thing about TradingView, which I have noted recently. Inside left. Now let's put it on the right, but at the bottom. You can mark out your institutional order flow aspects as you draw them, so you will know what you are looking at when you go to lower time frames. So this is December high. We need it on the right. So that's December high. This one we need it on the right also, so that we are in a position to see it when we go to lower time frames. You know what you are looking at. So these are the obvious institutional order flow points of interest on the monthly chart. So now we're going to go on to the weekly chart. Now looking at the monthly chart, our bias is clearly bullish. You see, remember, sequential, monthly, weekly and daily. On the monthly we are bullish, right? So now we're going to go on to the weekly, right? So on the weekly you can see we're now approaching what? The fair value gap. Of course, this is the first week of May, that's why we've got the fair value gap there. But if you look at the previous month, last week of April, we had a fair value gap. So our expectation is for market to fill up that gap before it goes to the upside. You see, that's how you have to be looking at the market. Now if you are looking for shorting opportunities, what do we have? We've got a bearish order block right here, right? That's on the monthly, on the weekly chart, right? We've got our bearish OB. So we've got our bearish OB on the weekly chart. Okay, let me just mark out that properly. So I'm gonna try to be as detailed as possible, because that will probably be an analysis which you take through for the next maybe 4 or 5 weeks, because you have all the institutional order flow marked out. So on the weekly, if you are going to be hunting for shorting opportunities, you need a retracement to the upside, that's redistribution, before market goes lower, probably to fill up the void, the fair value gap, or back to December highs. You see, that's how you have to approach shorts. But in terms of longs, right, from current price, you just need price to reach, say, the equilibrium point of the monthly fair value gap for markets to head towards the previous month high. You see, the high of April. That's what you have to do, which is the most highly likely scenario, looking for long opportunities in that monthly fair value gap. Because as for shorts, I think the only time we're gonna say we're going to be looking for shorting opportunities is if price breaks below 1984. You see, if we break below 1984, then we should anticipate market to trade to the downside. Anything above 1984, look for price to trade into discount before it moves higher, right? So on the weekly, we have marked out our weekly bearish order block, which is not high probability. Take note, because it's not accompanied by a fair value gap, so it's not a high probability. The high probability area that we've got here is the monthly fair value gap, right? So we're gonna go to the daily chart. Now on the daily, you can see here we've got so this is Monday's low and the current high of Wednesday, which is today's price action. That's a level of hunting for shorting opportunities, most probably heading into NFP. We don't know how or what number is going to come out for NFP. Let's go to the calendar quickly. Today we've got PMIs. We've got manufacturing PMIs at Q4, and we also have crude oil inventories. We've got rate decision later on tonight. So understanding your areas heading into those crucial fundamentals is very important. So I wouldn't be surprised if we resume the uptrend, right? If we resume the uptrend, targeting what? Internal range liquidity. So most probably we're talking of this high, right? And we're also talking of this high. A bit extreme, but ultimately in terms of long-term view, it's something that's feasible. It's something where price can actually reach out for, right? So this bearish order block on the daily, our daily bearish OB, is high probability. D1 bearish order block, and we've got internal range liquidity right here. Buy stops, right? Internal range liquidity, buy stops. So if we are hunting for longs, those are the levels you need price to target. Those will be your ultimate target. Mohammed, you must take note of these levels that I'm highlighting, because I know you like the precious metal. You like the precious metal. So take note of those levels in terms of targets, right? That's for long positions, right? Which is our monthly and weekly sequential levels. So for shorting opportunities, right? For shorting opportunities, the fair value gap that I have first highlighted, this level here, but this could be a bit tricky heading into FOMC, so you need to be in a position to exercise caution. You need to be in a position to exercise caution. Exercise caution. I would say the whole of today, heading into FOMC, rather take a break and see how price is delivered, what price action is happening, how price is being delivered, what aspects of the market are being fulfilled, you see. Then you can learn and understand from that level. Yes, I know it's good to trade FOMC. You can get lucky. You can be in a position and market goes in your direction. But it's a very volatile time of the market, and it only gives us our directional bias. It emphasizes where we are going to take price, or what trades are we going to take for the next quarter, or for the next week, for the next 2, 3, or 4 weeks, next month, next 2, 3 months. You see, that's why I advise people just to stay out. You see, because yes, it's good if you are in the right direction, if your focus is right, but it's so bad when it goes against you. So in terms of sell stops, that's liquidity of where the market might actually want to reach out for. So we've got this low here, that's internal range liquidity sell stops. So why are these internal range? Right, so let's put this at the bottom. Internal range. External range, we're only talking of 20, 24, 30. That's external range. And then December high below that, that's external range. So we're looking at this level here. That's our range, where the huge uptrend originated from the bottom to the upside. You can see here reaccumulation for a push to the downside, to the upside. So take note of that. So these are internal range sell stops. So for now, I'm expecting market to trade towards internal range liquidity pool of sell stops. These levels here, I expect price to fill up those aspects of the market. So I'm leaning more towards long positions, right? If we do take out this internal range, if price trades below, then I'm expecting price to go to the upside, especially in this gray shaded area, right? The monthly fair value gap. Inside the monthly fair value gap, I'm expecting price to go to the upside. So now this is on the daily. Now we go to the H4, which is our entry time frame, right? So now on the H4, you can see here where we have our internal range liquidity of sell stops, this level here. If price does come and trade below, I'm expecting a move to the upside. This liquidity void here, 1, 2, 3, 4, 5 candles, right? Once it's filled, right, if price trades back to 2321, right, 2321, I'm expecting another impulsive move trading lower, most probably NFP, right? If we are at those price levels, if NFP comes and we're at 2266, I would lean more towards displacement to the upside. You see, so it's that type of focus that you need to have. You need to have that type of anticipation. You see, anticipation skills of knowing how to react once price is at a certain point of interest. Like yesterday, we spoke about the CB consumer report, right, which came out negative. But did you see how dollar rallied to the upside? Right, dollar went all the way. So that's important. You must know how to react once you have a fundamental and price is aligning at a crucial point of interest. When I say point of interest, I'm talking of your discount and your premium areas. Where is price? See? So that's what you have to understand when you're trading the precious metal. So as of now, the only thing that you really need to keep your tabs on when it comes to the precious metal is what's happening in the Middle East. That's number one. And also the fundamentals that are coming, especially when the Fed guys are speaking, or someone like Yellen, when they are talking, take note of what they are saying, because they'll give you clues. Like today we've got Powell, right? We've got Powell at 8. Is it 8? Yeah, we've got Powell at 8:30. You see, take note. Don't rush. Don't force yourself to be trading at that time, because you don't know what these guys are going to say. But it gives you forward guidance on what you need to do. So yeah, that's my analysis on the precious metal. I hope you have picked up one or two aspects of things that you need to be well aware of when you're going into this market. And just a quick look on dollar index. You can see the price is actually being delivered. It's been delivered perfectly to our target. I'm sure if we look at MT5, if we go to MT5, let's see, where's dollar index? I'm sure we've traded above. Let's go to the weekly chart. So that's MT5 dollar index. You can see there we've traded above this high here. That's on dollar index. See this high? That was the target that I mentioned right there, 107. On trading view, we haven't traded above, so price has actually delivered the weekly forecast that I gave out on dollar index. And now heading into FOMC and NFP tomorrow, and those PMIs that are coming, take note of this high probability bearish order block here, and we've got a favorable gap. Take note of that level. This area here could provide resistance for price to go lower and retest these old highs here on the H4 time frame. So yeah, that's pretty much about it, gents. I hope you picked a thing or two regarding the precious metal. As it is, I'm leaning more towards longs only from higher time frame discount array. So the discount arrays that I would say use here is weekly and monthly. Don't use a daily discount. As you can see, we have a structure where market is showing us signs that it could be heading lower, you see. So for the uptrend to resume, we really need to take out $2,353 an ounce for price to target 2,430, you see. So yeah, that's pretty much about it. I hope you picked a thing or two, and I wish you guys good luck and happy trading. Thank you.